Okay, we're going to do another short review. Here's the disclaimer. As seen in the description as well. NFA. Alright, so yesterday we had these levels marked out. So sitting here on the weekly, we had these levels graded. We did not see that high taken out. In the E-mini, but today is Tuesday, February 24th, currently 8:36. Um, if we have this ES pulled up, if we look at the NASDAQ, that high was ran out before, or well, that was from Friday. So, but if we dig down into the lower time frames, we saw that these relative equals are taken out, and we had that precision resistance on that halted trading hours gap from Friday, November 28th. Even further, if we look at it, questionable behavior to the tick. I think one tick overshoot, few, that's the low of the day, and immediate rejection. But for today and days following, we're gonna clean it up a little bit. We're grading this wick to see. Michael had stated candle closure below the consequent encroachment. That's our indication that this low is in play, this low is in play, and ultimately these lows and these lows. But if we look at the dollar, um, we did see some expectations come to pass. We're looking lower, and this was our premium sensitivity. If we grade this as well, it didn't have the strength to get below that upper quadrant. And ultimately, we had to push higher based off of that. You need a serious push up above uh, these imbalances, especially here. And this high, that high. I like going straight from the candle body because that's the real start of the sell model. Low resistance. Um, so right now we're gonna look for these highs, but obviously it does not need to come to pass since we had yesterday's high taken out already. But we have these relative equal highs up here. Oil. Um, Same for the expectations. If they want to leave this open, there's only more strength for the upside. And we'll look for, this area up here. There's a lot of liquidity sitting up there. So it should be on the radar. Going back to the NASDAQ. Uh, Same thing with this wick. Grading it. This is a weekly wick or monthly. We saw that tapped into yesterday to the tick. But now we have the relative equals down below there. For my bias to switch, we need a daily candle close above this area. But for now, we're looking for lower prices. We have some semi-relative equal highs up here. And that yearly first presentation. But our look for today. Again, 3-day highs and lows. I don't need this level because it's already shown. These are in days to come. So that's kind of what we're looking at. Let's back off of these for a second and go into the regular trading hours. I had this level marked out from yesterday. It was traded into. Um, we saw the entries off of that. Right here, midpoint, midpoint, just for cherry picks. But we could see a run back into here before these lows are taken out. We'll have to see the gap created at 9:30, and we will roll from there. Let's take a look at it on ES. Same kind of thing here. I'm going to use that volume imbalance. Currently sitting inside of this. I don't want to put too much to make it a messy view, but I think we understand what we're looking at here. Again, we could see a run back up into here before lower prices, but for now, the bias is still lower prices. Uh, and we'll continue until we see the close above here. You could see a wick up into that new week opening gap. Uh, but until then, we're looking at the holiday trading hours gap and this discount wick. Dollar to continue higher. So yeah, that's where I stand. Um, I'll check back tomorrow. Be safe and God bless.